Hello and welcome to another session of the Let's Get Technical series. I'm Kavita, Agrawal, the founder of EXP-Invest, and we are here today to talk about LATENTVIEW. This is our Let's Get Technical series where every Wednesday I bring to you one stock where I have done a trade or analysis, and I want to discuss with you in great details the technical analysis that went behind it. So on my screen, you're able to see my stock recommendation sheet. This is where I brainstorm all the stock recommendations. I follow them, and when it's the right time, I give it to my members. So today we are going to discuss this particular idea. We've already discussed Ambuja Cement. We've also discussed Alchem just last week, which was a huge success. So we are going to do a similar analysis for LATENTVIEW also today. The stock of was recommended on the 19th of November, and the overall weakness was considered to be in the mid tier, even from a swing trading perspective, which means that it was not exactly a easy or a quick money kind of trade. It was a little risky. The time horizon which I had defined for the stock at the time of giving the recommendation was 8 weeks. That is 2 months. Now, the target originally for the stock was 540, whereas the trade stop loss at the moment the stock was ended was 480. So remember, the stop loss level is something that we keep changing as the stock keeps moving in our direction. The stock was spotted at 410, and then finally on the 5th of December, the stock idea was closed because the trailing stop loss of 400 got triggered. It delivered 18.33% profit in 26 days. Now that you understand all of that, now let's go to the chart and identify these dates. So 9th of November and 5th of December. So this is my trading view. I'm going to open LATENTVIEW and let's go to the daily chart. And you can already see here that the chart, the pins are marked. But you know what I'm going to do? I am going to mark them again so that it becomes a little easy for you to see what I'm doing. So from here, I'm going to take this white pin and drop it here, make it a little bit bigger. So this is where we entered the stock. This is where we exited the stock. I'm going to make this yellow. The return profile is approximately 18 or 19% in 26, 27 days. So now let's go into why we picked up this trade and what was the management technique that we used. So as always, we'll start from the highest time. Now on this weekly time frame, what I could see very clearly was, first of all, there is a strong uptrend which has begun. So this can be called as a rounding bottom, or some people can also call it a double bottom or the weekly time frame. When the problem with the double bottom is that you can only initiate a position when the stock goes above this price. Now you see, you've already missed a major chunk of the. That is not what I prefer. So what I did was, when I saw that the stock had given a breakout, I waited for the stock to take some correction. It was very encouraging that even on the weekly time frame, I could see that the correction that occurred on low volumes, which means that the volume was promising when the price was going up, but it started to decline when the price fell down. This is a strong point. This means that there is participation in the stock, but not on the downside, only on the upside. Moving to the weekly time frame, daily time frame from the weekly time frame. So this correction that happened. Let's clean up the chart a little. So what we could see on the daily time frame, we'll analyze first the volume profile, then we'll go to the RSI, then we'll go to the moving average. On the volume profile, again, what we just saw on the weekly time frame volume histogram is again very well visible on the daily time frame histogram as well. It is important for you to understand the setting behind these. The daily volumes, the daily, weekly, 75 minutes, 15 minutes, for the purpose of volume specifically, are set in such a way that they all show the same period. So that is why I use factors between my time. So the primary volume setting is, so this was a histogram, right? Basically, I use the MACD and I remove the fast and slow line. So the fast length is 20 and the slow length is 100. In simple language, I am comparing my 20-day average volume with the 100-day average volume. Now you'll ask, why 20-day? Why not 14-day? Why not 7-day? Because my average holding period is 21 days for any stock. So if I want a good entry and exit, I want to make sure that the stock has started showing positivity in over a period of time, which is enough for my holding period. That is why I go for the 20-day over the 100-day average. Now, talking about the volume profile, the volume analysis here, you can clearly see that the volume was on the up to this point. So from here to here, the volume was on the uptrend. Here, the volume declined. Now, the volume declined, but the price went up. So this is a bit of a mismatch. This was an indication that some correction was going to come. So instead of giving the stock idea here, where the double bottom breakout happened, I waited for the stock to take a correction. Now, it was very encouraging that the volume dipped when the correction happened. And then the volume started to increase here. But look at what happened here. The price also went up. So this was another promising point. Now, when I got the opportunity that the price came back down again, that is when I entered. Now, why I entered, we'll come to that later. Let's talk about RSI on the daily time frame. I've given a very good signal. If you've been watching my Let's Get Technical series, then you already know about this phenomenon. This is nothing but a best friend, RSI range shift. Now, this RSI range shift indicated to us that even though the price hadn't moved a lot, the momentum was picking up something very positive. And that means the RSI was not going to come down below the level of 40 on the daily time frame. And this 40 is not a rule of thumb. I have done the past analysis on LATENTVIEW, and I know for a fact that whenever the stock has some tendency to go up, it likes to take support at the level of 40. Going one time frame lower to the 75-minute time frame. Now, what I can see here clearly is that the RSI positive range shift was also very evident on the 75-minute time frame, except for the small part where this correction began to unfold. Let's change the color of a pencil for a while. When this correction started to unfold, RSI on the 7-minute time frame came to the bear shift, which is quite normal because if you are looking at a higher time frame, you can expect the lower time frame to be a little bit more sensitive. Now, because 75-minute time frame is our decision-making time frame and not the daily time frame, it is important for us to wait for confirmation on the 75-minute time frame, no matter how strong the other daily time frame look. So what did we do? We waited for the RSI to go back into the bullish zone. How do we know it's in the bullish zone? Because see here, the price is almost making the same low, but RSI here is making the positive divergence, is making a higher high. I'm sorry, the price is making the same low, but the RSI is making a higher. The phenomena of RSI divergence, positive or negative, happens exactly when the range shift happens. So here we can see that when RSI on the 75-minute time frame went from the bearish range back to the bullish range, it established itself with a pretty significant positive divergence. And this exactly was our signal. Even if we have the confirmation that it's a good time to enter, we still want to go one more time frame lower and make sure that our analysis is on point. We want to make it as perfect as possible. So what I saw was on the 15-minute time frame, I was waiting for the RSI to come back down to the level of 30. But when I noticed that this RSI positive divergence had formed here, let me delete that and show it to you again. So here you can see the price is at the same level, but then RSI has clearly made a strong positive divergence. Now, when the RSI on the 15-minute time frame also gave a positive divergence, it was very evident that it is not going anywhere below the level of 40. And I did not want to lose this rally. You know why? Because we had already seen on the daily time frame that this rally was unfolding in a very strong manner. In fact, that being said, latent view is still quite attractive. Latent view, if you notice, even this last rally that unfolded, that also unfolded on strong volume. So I would expect the stock of latent view to finish its correction and start rallying anytime soon. So far, the correction is not completely over. I would wait for a little bit more stability to happen here, but we'll keep an eye on latent view. And as soon as it becomes a good candidate for fresh re-entry, we are going to tell our members. So this is how I analyzed the entry and gave the entry position. But remember one thing, that between the moment I spotted the positive in the primary trend of the stock and I gave the recommendation to my members to buy the stock, there was a huge waiting period. And I will tell you how much that waiting period was and what I did in between that waiting period. I waited 61 days for this stock to give a recommendation to my members. And if you are a swing trader, no matter what your time horizon is, you have to make sure that you have a system to identify good opportunities and monitor them. Wait for them to come to a level where it is most justified for you to make the purchase in your stock. Because if you do not do that, then you will be doing injustice with your stock. As a result of which, you will be doing injustice with your capital. As a result of which, you will end up making your entries either too soon or too late. If I had gone ahead and given the fresh entry here where the breakout happened, because see, the volume was very strong. It's a double bottom breakout on the weekly time frame, daily time frame. It might look very strong, right? If I had done that, what would have happened is my capital would have stayed idle for nearly 3 months. Instead, what I did was I allocated my capital to where the opportunity or the momentum was in action now. And for this stock, I kept it on my radar. So even to keep stocks on your radar, you need to have a system. You need to use watch list. You need to use alerts. Now, I run a course on advanced technical analysis where I teach these systems, not just teach, I also help you build your own dashboards. So if that is something that you're interested in, then I suggest you connect with me via my Telegram channel. But if you already use Telegram, then it's very easy to connect with me on Telegram. This is my channel. You can search Trade with Kavita. So what you have to do in the search bar, just go and write Trade with Kavita and hit enter and then join the channel. Now let's talk about how did we manage the position, because like I told you, the target for the stock is 5, but we got out from the stock at 86. Why did we get out early than our target? And why did we not wait for the target to get achieved? I'm going to answer all of those questions for you now. But let's begin from the first step. That is identifying the trade setup. When I identified the stock, my natural stop loss was going to be this recent low, because I have done the analysis on the daily, 75 and the 15-minute time frame, and all of the time frames have done something called eclipsing. That is, the RSI on all 3 of them has gone into the bullish range, has given RSI positive divergence, now is ready to rally. So if the previous low gets breached, that will be a nullification of our view. That is why when I decided that it was time for my members to make positions in the stock, I set the stop loss at the most recent low. So this became our first stop loss. So in order to do the first stop loss revision, we have to wait for the most recent resistance to get breached. For us, the most recent resistance at that point of time was this purple line. So when this resistance got breached at this point, this is when we first revised our stop loss to bring it to our cost price. The whole purpose of revising stop loss is to make sure that you reach your break-even price. You don't want your stop loss to get triggered prematurely. You also don't want your stop loss to be too tight. And this honestly takes a lot of trial and error. I myself have learned this through the art of past trade analysis, which I have been indulging in since the last 3 years. In past trade analysis, I go back to my every quarter after 3 months have passed since I closed the trade. And then I see what I did wrong, what I did for every single trade, maybe profit or loss, to determine whether the behavior that I indulged in was correct or incorrect. If it was correct and it led to profit or loss, it stays. If it was incorrect, then irrespective of whether it ended in profit or loss, it needs to be eliminated from my trading system. This process of fast trade analysis has helped me become not just a much more disciplined trader, but also a much more disciplined human being in general. So when this stop loss was revised for the first time, we had to identify the next resistance. So the next natural resistance we can see was this peak here. And soon enough, the price moved up. So when this resistance got breached again, it was time for us to revise that stop loss. Now, I have this rule that when the stop loss gets revised to a point that it goes above my cost price, especially if the price is moving really fast, then I start changing my or revising my stop loss to the previous identified resistance. So here, because the previous identified resistance was at the level of 432, my stop loss would be revised a little bit lower because, again, breathing space, little bit lower, just 1 or 2 rupees lower at 429. The next job for us is to identify the very next resistance. And how we're going to do it is we are going to identify it and we're going to set an alert because we don't want to manually come to our chart and see whether the price has gone above the resistance. So we can set an alert. Right now, for illustration purposes, I'm showing you with purple lines, but I use these parallel line channels. And how I set the alert on the parallel line channel is I click this clock or this alarm clock, and then I change this. I keep the expiration always open-ended. I change the trigger to once per bar, and I create it. So soon enough, as you can see, the stock, because of the strong momentum, it also crossed above this resistance. So naturally, my stop loss was now revised to come below the previous resistance, somewhere near the level of 442. So you can see that first stop loss from 394, it came to around 10-15 points higher to 409. Then it came to 429. Then it came to 442. So it's a really nice progressive increase in our stop loss. What this is doing is that as the price moves in a direction, it is locking in our profit. Now, even when it comes to setting stop loss, there is an art associated with it. If you set stop loss, especially on the Zerodha platform, you will see that they ask you for two prices. One is the price and one is the limit price, which is just called price. So the trick to making sure that your stop loss is when your position gets exited is you set the trigger price and then you set the limit price slightly lower than your trigger price, not above, slightly lower than your trigger price. So that's just a side note for you. Now, once this resistance got breached and we revised our stop loss, we updated our trade tracker, we revised the GTT order on a Zerodha account. Now it was time to identify the next resistance. But if you see the next resistance is way too far away and it's also significantly higher, but we have no other option. So what we're going to do is we are going to take this support here as our potential next resistance. So this is where we got into a little bit of trouble. So this resistance got breached and our stop loss got revised here. Now, because I could see clearly that a negative divergence had started forming on the 15-minute time frame, and the price of LATENTVIEW, which was otherwise in a strong momentum, had started giving this sideways consolidation kind of thing, I determined that I do not want to lose a big chunk of this past profit that I have experienced. Because remember, your internal rate of return is very important here. And this performance is really great. So I don't want to lose a lot of this unrealized profit because of the arrogance that my target hasn't come. So I'm not going to exit the stock. Preserving unrealized profit is just as important as preserving your capital in the market. So that is the reason why when I noticed this development of the negative divergence and subsequent negative range shift, of why am I calling it a negative range shift? Because RSI here is taking resistance at the level of 60, even though the price has paused a higher high. I got skeptical and I revised my target really tight to 486 level. Now you can see that the price soon enough breached that and started falling down. It was very satisfying to see that on the same day, the stock had breached and fallen nearly 2%. And since the exit till now, the stock has fallen nearly 8% and it's still not ready to purchase. However, I do see that the stock is approaching this wonderful 200 support of the 75-minute time frame, and that could potentially be a very good entry point. So what I'm going to do is I'm going to set up an alert for this. So you see what I did? I set the condition that LATENTVIEW crossing EMA 1000 on the 15-minute time frame, which by factor of 5 is the 200 EMA on the 75-minute time frame. When it does, I want to only one create. So now when in my alert log, I see that LATENTVIEW has crossed the 1000 EMA on the 15-minute time frame, I automatically know this is potentially a good time to entry. Quickly going to come back to my chart, do my analysis, And if things look good, I'm going to give the recommendations to my members of the Trade Together program that I share swing trading recommendations. If you want to join my swing trading program, you can also be a part of it. The ET moderator has dropped the link to the Gap Up platform. Gap Up is an initiative by Wiki and Economic Times where you can find SEBI registered research analysts like myself and take their help to elevate your portfolio performance. We all understand that doing analysis of stocks is a very time consuming and very skill intensive task. If you don't have the time to give 5 years to developing this intense skill, then do the smart thing, not the hard thing. Join the Gapper platform and find my profile there. Join my Trade Together program. So with that, I have come to the end of everything that I had to discuss with you. I hope I was able to add some value to you. With this, I will now move on to the comments and help you answer your question because this is the technical analysis session and it's my moral responsibility to answer your stock query. In your portfolio, if you have stock where you don't know what to do, if your capital is out of your control, then tell me the name of the stock and the cost price, and I will do a live analysis and I will give you key levels that you should absolutely follow. We already have a request from Glenn Fernandez. Any view on Patanjali Foods? Let's pull out the chart of Patanjali Foods. Going by the time frame, I can see that Patanjali Foods is showing very strong upside volume parallel to strong upside in price. So this is first a telltale sign of a strong underlying bullish momentum. Here also we can see some consolidation, and this point onwards when the price started to go up, we can clearly see that the volume also turned pretty positive, and then this happened again. But is it a good time to add right now? Let's go down one time frame lower to the 75-minute time. So the 75-minute time frame is clearly in a super bullish range, the RSI that is. If we just take a moment to make some objective observations. So right now, it's just very recently become bullish. So I think Patanjali is pretty good to continue making a position. If you look at the 15-minute time frame also, even the 15-minute time frame shows you an ultra HD version that the volume activity is supporting the uptrend and it's not supporting the downtrend because obviously also the RSI has just taken support at the level of 30 and it started to go up. So if you want to make a fresh position in Patanjali, given these observations, it is not a bad idea. I will encourage you to use a stop loss right at the level of, you can use this recent low. 1497 should be your stop loss. Remember, 1500 is a psychological support zone. So you don't want your stop loss to be exactly 15, keep it slightly lower. Also, I can see that there is a small spike here, price spike. So you also want to avoid the low of the price spike when setting your stop loss. And as for the target, it's very hard to give the target in this stock, but let me try. Let me draw some trend line. Maybe they will help me in giving you a potential target. So this does look like a bit of a breakout, and I would expect the stock to go up and retest my trend line here. So the target for you would be a minimum of, if you want to give a little conservative target, even if let's just make this a straight line because we don't want to get very optimistic. But even if I'm being conservative, I can see a potentially 30% upside in Patanjali. So Glenn, that's for you. Good evening to you too, Simran. And hello to you, Sagar. So you're interested. So we have one analysis of Berry, which is trading around 2. I am waiting for a correction to happen here in the stock. So there is signs of positivity for sure. There is signs of positivity for sure. But I am seeking a little bit more confirmation from the 75-minute time frame. And that is the reason why I would not recommend a long right away. I would want to see the stock come down and retrieve the level of 500 again. CESC for tomorrow, no Sagar. CESC is a missed train. So I actually have a long position in series disclosure in my client's portfolio. And I have had this long position since quite a while. So I bought the first tranche where this beautiful correction happened and then the second tranche right here. So this position is on an average showing a good 30% profit, but fresh entry I would not suggest because I personally have started trailing the stop loss quite aggressively now, even though the stock has given a breakout. But if you still insist on making the entry here, I would suggest you maintain a stop loss at the level of 170. And as for the target, the stock does show promising momentum to rally all the way to 160. Now, let's move on. Actually, I will change my statement. It continues to look very attractive considering the volume profile, considering the RSI profile. It can give you a little bit of pain because the 15-minute time frame got a little below 60 when this consolidation happened. But there is a pretty good chance that now the Nifty has also forged the bottom at around 20,750, which is, by the way, the support level that I've been telling you about in the market outlook series that we do on Friday, right? So Nifty today almost touched that level of 20,750. And oh my God, the way it reversed and rallied, it was beautiful to watch. All right. Long-term view on. So we have Manjana J and they want long-term view on Australia solution. I have not studied this stuff before. So let me see if I can do justice to this. So the very long-term trend is positive, but stock has not given any returns to its investors since 2017. I would say. But the weekly time frame does look like something might be changing. This daily time frame, I'm sorry, but this chart is out of my comfort zone. If you are a long-term holder uptrend, I would expect तो 75 मिनट टाइम फ्रेम रेजिस्टेंस नीचे में अपना ये सपोर्ट बेसिकली पहले रेजिस्टेंस था अब सपोर्ट बन चुका है क्योंकि प्राइस 437 के लेवल और आपका टारगेट वही होगा जो मेरा था पहले 500. So guys, if you found this analysis helpful before you leave, please be sure to give a thumbs up to this live session. So don't forget to give a thumbs up and leave a comment and also share this video with your friends who are interested in technical analysis or swing trading or momentum trading in the market, because the whole objective of doing these detailed analysis is so that someone else out there can find value in it. So if you know someone who does technical analysis, even a little bit, or indulges in swing trading or short-term trading of any sort, do share this video with them. You can minimize this. Ashok Leland for current level. Ashish is asking for a few days back. I was honestly not positive on auto stock. And what I can see here is that auto stocks have so far not participated a lot. So the price action is not very encouraging, I would say, even though the volume did improve. The 200 EMA did give support. So the price is taking support in the 200 EMA is a big deal because 200 EMA on daily time frame, 15-minute time frame, even on the 75-minute and the weekly time frame. So 200 EMA is one EMA which you should absolutely always use on the chart if you're an analyst. So here we can see that the 200 EMA repeatedly actually has a tendency to lend support to the price. Here also, why would we not? Right. See, the thing is that I don't see any outstanding negativity on the chart of Ashok Leyland, but at the same time, I also don't see something that could compel me to allocate my capital to Ashok Leyland at this point of time. So Shriram is asking for PFC. So PFC is given like a massive jump today, and it is literally been outperforming the market on a feverish momentum since October 22nd. It's crazy that the stock has gone 4x. And honestly, very hard for me to give you any kind of comment in this. But I do feel a little discouraged that the volume in the recent times is not as strong as it should be, even though the overall trend of the volume is still quite positive. So I personally wouldn't invest my money somewhere where the trend has been missed. But if you want to enter, I will give you a suggestion. You set an alert if you use TradingView on the 100 EMA of the 15-minute time frame. And whenever the stock comes back to that, then would be a good time to purchase. Why am I saying this? Because if you buy the stock now, after a day that when the stock moved up 10%, there is a good chance that it can give a pullback. If it does that, then your capital can get exposed to 3, 4, 5% risk. So remember, in stock market, making profit is the second priority. Protecting your capital is the first one. So be a little wary of entering stocks which have given such sharp movement and find what their tendency is. If they have a tendency to take support at a certain EMA repeatedly on the intraday chart, identify that with eyeballing the charts and then use alert to get notified when the stock approaches that particular EMA again. Mercury share. I don't know what this is. Girish, let's take a look at this. You don't want to buy stocks that are so illiquid because I will show you something. There was a point of time when the stock of Alok Industries was also going up like that, but also see how it started to go down. You don't want to get stuck on the wrong side of the trend. And since then, it has absolutely not recovered the peak that it forged. So you don't want to get stuck in illiquid stock. So Raj, I hope you've appreciated the view on LATENTVIEW that I've already shared. Now we'll move on to Umran Gupta. Thank you so much for your kind comment. Do join my Telegram channel and connect with me. Thank you for mentioning this stock because it's been in the back of my mind, but for some reason I could not get around to seeing it. This is probably why, because long time back I noticed massive negative divergence on the weekly time frame, which probably made me very uncomfortable and hooked me. Also on the daily time frame, see the volume was increasing in the last leg of this decline, and then the volume died when the price went a little bit up. And you see the volume, it's very erratic. I don't like this. Sure, now that the price is above the 200 EMA on the daily time frame, the volume is, but the RSI is overbought. I am not comfortable with this. I also look at the 75-minute time frame reaching the level of indicating that it's the negative range, bearish range. We do not want to participate in that. So I would avoid this heading till now and wait for it to pop up again on my and get dropped by my scanner before I touch it. What to do now, when to buy LATENTVIEW share and at what level? I've already answered that for you, Mr. Gas. We have Abraham asking for one. I am not friendly with banking stock. Also, rally with bad volume is, I wouldn't touch it with a 14-week long pole. The primary trend in Bandhan Bank is negative, not touching the stock. So you also mentioned that you purchased it at 2. I would strongly recommend you to rip off the bank just by PFC. There are much better stocks than this stock in the market. So you have 260 Five, 400, and I'm guessing. Which one? I guess Dalmia Sugar. I do not like, so these sugar stocks are not looking very good. There's a lot of politics happening there with the elections coming. Politicians don't want sugar price in the election polls, as a result of which they're restricting the whole ethanol production side, which is a major revenue driver for sugar industry. That is not a very good look for sugar companies. Also, look at this decline, my friend, increasing when the price is declining. What should you do? I think over the next few days, the market is going to see a little bit of upside. For Dalmia Sugar specifically, I can see the stock might come as high as. If that happens, I would suggest that you get out, book your loss, put your money somewhere, the momentum feels, and see your capital soar instead of holding on to these sore losers stocks which are eating into your capital. And also share it with others who you know are trading but not so well. We have a query for PPM chart development. Absolutely avoid. ITC, Gautam, ITC. Oh my God, ITC looks good. Yeah, ITC looks good because it's just super strong underlying trend, correction, consolidation, breakout with good volumes on the upside. Maintain stop loss at the level of 447 and go for a target of. So that's that. Can you please suggest entry in Zen? See, I have issue with this structure of questioning. Suggest an entry in Zen started. See, when you look at a chart, when you analyze a stock, or when you approach a stock with the thought that can I enter this or where should I enter this, you are entering it with a buy. Don't do that to yourself. Instead, look at the chart objectively, look at the volume, the RSI, the momentum, basically, the moving averages, the look for across different time frames, and then make a decision. Then make a objective decision of what you should do. Should you buy it? Should you buy it in lump sum? Should you buy it in installments? If you hold it, should you still hold it? Would you buy the stock given how the chart looks right now? The answer is no, sell it. Exit. You have to make sure that you enter the analysis of any stock from a very neutral perspective. That was a little bit of yarn. Moving on to the answer to your question. Tensor technology is absolutely a no-go for multiple reasons. On the daily time frame, the RSI has clearly gone into the negative range shift. It's given, it is screaming at you, please don't buy me. I am going to correct terribly. Also, there is a strong resistance in the form of this green zone at 573, which you need to respect. Again, look at the volume also. The volume has not supported the last part of the rally, which is very discouraging. So if any one of you is holding Zensa Technologies, I would suggest please exit. So today's session was a lot of fun for me. I hope it was just as much fun for you. And I will see you again on Friday in the Market Outlook series, where I will come live on YouTube and the ET markets at 4 p.m. to discuss with you what Nifty has done, Bank Nifty has done, and the inter-chart analysis, because we want to know where the momentum is headed so that we can put our money there. So join me on the Market Outlook session at 4 p.m. on my YouTube channel and the ET market. So thank you so much for joining, giving me your time and your attention.